Bitcoin was designed to solve a specific problem. It was trying to be a form of money that would not succumb to capture. So it would not be centralized and it couldn't be controlled by some central authority. So every property and every part of Bitcoin came out from that. So we sometimes sort of scratch our heads as to why the founder was anonymous. Well, simply put, Bitcoin wasn't the first attempt at a decentralized and censorship-resistant money. But every previous attempt was either shut down, and often, in some cases, the founders were actually put into jail. So with that history in mind, it was sort of inevitable that any successful currency would have to have a founder that was anonymous.
Dear crypto community and blockchain buddies across the globe, welcome back to season 2 of Cryptonites, the no BS blockchain channel built with the community and for the community. And as always, we have timeless interviews to teach you everything you need to know about Bitcoin, cryptocurrency, and the financial market. So without further ado, we have another living legend. And I would like to give a big shout out to Nindi, the leader of the London powwow. It's thanks to you that I connected with this gentleman, the CEO of Coinfloor, Obi. It's a pleasure to have you, brother.
Pleasure to be here.
Yeah, so Obi, you are definitely defined as one of the legends here in London and the UK. You've been in the space for years and years, and I know you've been through a lot of struggles.
If it was possible for me to blush, I would blush. But, thank you very much for saying that. It's really weird to hear yourself described in those terms. So I wouldn't describe myself that way, but thank you.
Yeah, I mean, that's what everyone has been saying. And I really would love to start off by hearing the struggles you had, because I know it wasn't an easy path to start off so early and still be here in the crypto space. So if you don't mind sharing that with us.
Okay, well, Coinfloor started at probably the worst possible time. When we started, it was late 2013, and we started as an OTC company. We would do over-the-counter trades, which was a sort of manual trading approach. We finally launched our electronic digital trading system in the first quarter of 2014. And that was probably the worst possible time to launch a cryptocurrency exchange, because it was basically, little did we know, it was the beginning of a prolonged bear market. So we launched into a bear market, and price of Bitcoin went lower and lower and lower over the following 12 or so months. So it was a real struggle, but it actually really hardened us. I talk a lot about Bitcoin, but Bitcoin is the world's first anti-fragile money. And so the more it's attacked, the stronger it gets. And Coinfloor became an anti-fragile cryptocurrency exchange. So we were launched in this really sort of terrible time, but we became stronger. We actually did something really crazy for a startup, focused on being profitable. So we became profitable. But even so, it was a really tough time. And by 2015, the price of Bitcoin was now sort of starting to head towards the couple of £100. And I remember really clearly, myself and my co-founder, Mark, at the time, we were invited to the Royal Festival Hall to be part of this exhibition where the public met people from the city. It was called, I think it was called They Work For Us. And they had actuaries and traders and brokers and so on. And they also had on a cryptocurrency exchange runners, and that was myself and Mark. And we were there, sort of the low of the market, and person after person came up to us and talked to us, and we were trying to explain them why Bitcoin was, and because it really was just Bitcoin at the time, was so fundamentally transformative. And they were, the only thing I was saying is, isn't Bitcoin dead? Isn't Bitcoin dead? And we were trying to tell them, no, it's not. Really, the opportunity was massive at this time.
That feels like 2019.
It feels like 2019. And that was a real low in terms of perception, but we still held strong. We knew that there's something really powerful happening here. So fast forward 2 or 3 years later, and as we predicted, the market started becoming really bullish, and it increased and it grew, and our team and company grew. And it got to the point where we were asked to talk to various regulators, the Bank of England, the FCA, and finally, I was asked to give evidence in front of the Treasury Select Committee, which is sort of the UK equivalent of the Senate hearing. And various MPs wanted to understand Bitcoin and cryptocurrencies and its effect on society. And so we came this massive distance from 2014 all the way through to 2017. And now, after that, as you probably know, we went to another bear market and we're back into that situation, but we're seeing now the first fruits of the next bull run to happen over the next 1 to 2 years.
That's absolutely fascinating. And when it comes to the emotional side of being in this market or having investments, obviously the prolonged bear markets, like you were talking about, a lot of people feel overwhelmed, they capitulate, and a lot of people start losing belief. It's a very up and down market. I just really want to ask you, Obi, like, how did you still believe in Bitcoin despite the prolonged bear markets? What really kept you and made you want to stick to this?
I mean, when you first start, it's this new technology. It sounds interesting. Some people say they read the white paper and, they immediately understood it. But my background was that of a technologist. I studied computer science and cognitive science at University of College of London. And then I was 15 years as a CTO. So I'm an engineer. And the first thing I wanted to do was understand the technology. And when I got a chance to look at the white paper and understand it, I realized that this was a really powerful technology. But even then, it took me a while to really figure out the potential, because before understanding the technology, you had to understand the problem it was trying to solve. And it took me much longer to really understand how powerful money was, and the solving money and providing an alternative form of money. So once you realize that the technology allowed you to have the best form of money that the world has ever seen, and you also realize that money was one of the most powerful inventions that human beings have ever made, then it became inevitable that this was something really, really powerful. And like other disruptive technologies, like the car, when it first started, the first cars used to break down all the time. Only very wealthy people can have them. There was no infrastructure to support them. So you'd be very reasonable in thinking, if you had a really nice horse and a horse-drawn carriage, that cars were a really stupid idea. At the time, horses could go anywhere and cars pretty much couldn't do anything. But if you were an engineer and you really understood that this was the best form of transport, in theory, the world has ever made, you would know that over time, once the infrastructure is in place, once petrol stations, services and licensing and all this sort of stuff and roads were in place, cars would inevitably take over. And Bitcoin was the same. It was still a toddler at the time, and even today, at 10 years old, it's still a young child, but it inevitably will be the best form of money the world has ever seen.
It's really funny that you mentioned that, because some of the people back in the days, and there are some really famous people who said that this machine will never replace a nice carriage and horses. So it's exactly what you're saying. People didn't see it, but luckily.
Well, IBM said that there would be a world requirement for no more than I believe 7 or 11 computers worldwide, and they
That's
were
crazy.
sort of slightly a little bit off. Yeah.
I think IBM also said that smartphones would never take off, either Microsoft or IBM, but that just
History
shows.
is full of people who underpredict the power of disruptive technologies.
They really do. And there's one thing that you said was fascinating. You said the best form of money. I love that. I need to quote what you just said. And as you know, in order to qualify as money, we usually have the 3 boxes. So unit of account, store of value, and a medium of exchange. Do you feel like as of today, and obviously, different currencies do not necessarily check all the boxes, but do you feel like Bitcoin checks those 3 boxes as the best form of money?
So in a word, yes, it does. But you are correct. Different currencies will optimize for different things. But one of the biggest sort of misconceptions and battles is around unit of account versus store of value. Now, there are many currencies that have optimized for unit of account, i.e. they allow you to transfer value today as quickly as possible between one person and another person. But here's the thing. that is very useful for making transactions, but ultimately, there are many, many examples of currencies that do that very well, and other systems that do that well. So most fiat currencies can allow you to transact on a day-to-day basis, but on top of that, you have services like Venmo, PayPal, MasterCard, Visa, American Express, etc. In fact, you now have tap to pay, where with one tap you can buy something. And even further, you might know Amazon Go.
Yeah,
You've seen that
amazing.
service
Oh
where
my
you literally
God.
go into a store,
Crazy.
you walk in, you take the item that you want off the shelf, and you walk out. So that's 0 taps to buy. So given that, in theory, if you created an alternative, you can never get as good. The best you can do is get as good as 0 taps, unless you have some sort of minority report thing going on where it can predict what you want before you want it. So if you're trying to make a disruptive technology, you always want to go for the market that hasn't been dealt with. Now, in terms of store of value, think about it. What are the store of values now? You're a millennial, and what are the store of values you have access to? You've pretty much you've got stocks and equities and bonds, etc. And then you've got property, real estate, i.e., or gold, maybe. But gold is actually, it's heavy, it's physical, you have to, it takes a lot to store, you have to use a lot of resources to store it. Property, if you want to sell or transfer property from one person to another, you're talking about probably many months to sell and a lot of costs. And most of the other items, well, many people believe we're heading into recession, and so the only way a lot of those are moving over the next few years potentially could be down. And so you don't have many options to store your value or monies that are good at storing value. Bitcoin comes into the market, and compared to those, it's a far already, even in its sort of child state, already as good, if not far better than all of those, and far easier to transmit, far more fungible, etc., etc.
That's really fascinating. So if I can just recap what you said, in terms of a medium exchange, since we have PayPal and we have credit cards, and how would you place Bitcoin versus British pound, for example? Because obviously, as you know, Bitcoin is a borderless peer-to-peer electronic cash, but as you said, not everyone accepts it. So would you see Bitcoin as inferior or superior, for example, to the British pound? Or
I think storing, as the clue is in the name, store of value is probably more valuable because it's storing value. So I would say a currency that is optimized for storing value is more valuable than a currency that's optimized for transferring value, i.e. giving away value. There is a rule called Gresham's law, which talks about if you have two monies, so you have a good money and a bad money, i.e. a money that holds its value and a money that doesn't hold its value or is debased in some way, then the bad money pushes the good money out of the economy. And that sort of makes common sense. So if I had one money that I knew would go down in value in a year's time and another money that I knew would maintain its value or go up in value, which one would you spend first? You're going to spend the money that's going to go down in value. So even if the money that goes up in value over time was incredibly good at trading and being a good medium of exchange, it doesn't matter because you'd have to get rid of every last penny of the bad money first before you use that. Now, given that the bad money is inflationary and it has an infinite supply, it's going to take a while to get rid of an potentially infinite amount of money before you spend that. So you just need to be good enough to meet the demands of if someone, for whatever reason, really had to sell. And in that sense, Bitcoin's 7 to 12 transactions per second are far more than that requirement.
that's a really good point. In terms of the store of value, so you just touched upon inflationary, and obviously we have deflationary. I'm sure you've heard this many times from, maybe your grandparents or your uncles and aunts, and they're always like, everything is so expensive these days. And a lot of people tend to see, like, for example, typical fiat currency as a store of value.
Myself.
Oh, really? You noticed already?
I remember going to university and when I went to university, and we used to complain as students, it would be free university, we would be paid $3,000 a term and have all our costs paid. So that was, we would complain about that. So it's moved on a lot since then. So I completely understand
you
that.
understand
Let's
that?
continue.
No, but that's a really good point, because even in London, it's difficult to live here without roommating and stuff like that. But yeah, so they used to, I remember my grandmother always used to tell me that. He said, these days, everything is so expensive, blah, blah. And I didn't really understand what she was saying. I was like, what is she talking about? Like, this seems normal to me, until I used to see charts where you would see the value of the US dollar due to inflation losing 90% of its value and more in the past century, or since 1920. Do you like the fact that Bitcoin is deflationary? Is that one of the kind of ideas that makes you believe in Bitcoin as a store of value? Or are there any other components that you like in terms of the store of value component of Bitcoin?
I mean, that is one of the key aspects of it, being the ultimate store of value money. I think with any disruptive technology, you want to try and be the best, or have the potential to be the best at something. There's no point coming along and putting in a lot of effort to be as good as the existing systems. Disruptive technologies need to be several times better than what's in the incumbent.
Absolutely.
So if you've got one-click buying or zero-click buying with things like Amazon Go, it's very hard to see how you're going to be 10 times better than that. But in terms of store of value, and with the limited fixed supply of Bitcoin, and it can only go one way down in terms of the supply of Bitcoin if people lose Bitcoin, you know that it's fundamentally and mathematically better than every other store of value out there. Let's take gold, the sort of the previous king, or still current king of store of value. It's known as a stock to flow ratio. The amount of new flow of gold that enters the economy is, I believe, 62. So there's 1/62's worth of gold enters the economy every year. Now, this is a rough number, and if we found all gold on the planet Earth, there's still the potential that we could find gold on other planets. But with Bitcoin, no matter what you do, there's never going to be more than 21 million, unless you got everybody in the world who owns Bitcoin to agree to inflate the Bitcoin supply. So you have to get them to agree to do something that's to their detriment, which is highly unlikely to happen. People are unlikely to do things that are not in their interest.
That's a really good point. And talking about the 21st million Bitcoin that is actually mined, a lot of people are wondering, like, what is going to be the incentive for miners to keep mining? Because that's it, they'll only be able to mine and get rewarded through transaction fees. So they say that most of the miners will give up. Like, obviously, we're not going to be a part of this world by then, 2140.
Speak for yourself. I plan to be around when the last Bitcoin is mined, but carry on.
Then teach me how to. I would love to be alive as well. But
that's a very different conversation. But
in terms of that future, do you have any concerns about that? About the whole rewarding ecosystem for miners once we mint?
So the idea is that we have a fee economy. So when you send a transaction between one person and another, or one institution and another, there's a limited amount of space on the blockchain. That may increase over time, but there will always be limited to some extent. And so there will be competition for your transactions to be memorialized on this sort of on this ledger that is basically almost impossible to change as time goes by. And so, because there's competition, and there's a fee that you can attach to a transaction, and that fee will be the thing that replaces the block reward over time. So at the moment, the block reward is by far the largest part of the rewards that miners get for mining. But the hope is in 140 years it won't be. That being the case, no one knows for sure. That is probably one of the most experimental parts of Bitcoin, and generations in future will have to see what happens, and hopefully that does occur. But that's 140 years from now.
140 years
and
from
myself as well, because I'll still be around.
Yeah, absolutely. But it's a really good point. For me, the way I kind of see it is that, mining is going to be so cheap. Technology will have advanced so rapidly in the next 100 years that, if you just want to transact Bitcoin just through your phone, you'll be able to mine through phones, because the technology will have moved so much that just by keeping your phone on, there could be some sort of support throughout people to decide that I want to be a part of this ecosystem, just like running a node without having to mine with sophisticated technology.
That's one possibility. And if we were going to brainstorm, I mean, one idea I like is the idea that actually it'll still be this competition. So the resources to mine will increase. I think if you go far, if you sort of think that far in the future, the vast majority, if not all, mining will be through renewable sources as well. So the whole energy usage question will go away. I'm excited that we have a possibility for a financial system where pretty much, in theory, everybody can be part of it. And that's what's really the radical decentralization of a financial institution. I think the existing financial services space will continue to exist because centralized governance will continue to exist, and centralized governance wants to have an element of control and needs to control its money supply. But we're now going to have an option, and that's really what Bitcoin and other cryptocurrencies give. They give you optionality, and that hasn't existed for a very long time. The ability to send money electronically anywhere in the world, but outside of central control.
Absolutely. So you were talking a lot about the finite supply and the 21 million Bitcoins. There's one topic that could be overhyped, but I'm not sure. I'd love to get your angle. It's talking about the Bitcoin halving for next year. And since it's related to economics and the whole supply side of Bitcoin, if you don't mind telling us, so for those who are new to the Bitcoin halving idea, we used to have 25 Bitcoins as a reward for the miners. It'll be cut in half next year to 12.5 Bitcoins. Is that correct?
So when Bitcoin first started, so when it was first made, Bitcoin was designed to solve a specific problem. It was trying to be a form of money that would not succumb to capture. So it would not be centralized, and it couldn't be controlled by some central authority. So every property and everything that happened and every part of Bitcoin came out from that. So we sometimes sort of scratch our heads as to why the founder was anonymous. Well, simply put, Bitcoin wasn't the first attempt at a decentralized and censorship-resistant money. But every previous attempt was either shut down, and often, in some cases, the founders were actually put into jail. So with that history in mind, it was sort of inevitable that any successful currency would have to have a founder that was anonymous. Similarly, the fact that all previous currencies that attempted to do this were centralized, they were shut down because there was one place to turn off a light, turn off a switch. So it had to be decentralized. So similarly, when it comes to monetary policy, we had to work out how to do that in a way where there wouldn't be any form of regulatory capture, or there wouldn't be any form of moral hazard as well, because there's a lot of risk if you have control of money supply. So it had to be decided right at the beginning. And so the decision was made by this group or person, male, female group, to release a certain amount of Bitcoin over time. So with each block, originally 50 Bitcoin were released. And for the first 4 years, roughly first 4 years. After that, it reduced to 25 Bitcoin for the next 4 years. And then we're now in the third phase. So we're in years 10 or 11 or so to 12. And at the moment, it's 12.5 Bitcoin. Roughly May of next year, it's going to halve to, you're going to help me with the maths, but I believe it's 6.25 Bitcoin. So it's not that late. I still remember my basic maths. 6.25 Bitcoin per block. Now, in parallel, we now have over 10 years of data on Bitcoin. And many people have conjectured as to how Bitcoin's price is determined. And there's been lots of theories, but one really interesting theory, which I have a lot of stock with, is that Bitcoin basically operates like a digital gold, a digital store of value. And so gold and other precious metals are valued based on what's called the stock to flow ratio. And there's If you go online, you can see a guy called Plan B at,
Yeah.
you know Plan B, at 100
Amazing.
trillion USD. Incredible, really, really interesting, right? And also Nick Carter as well. I give shout outs to Nick. He also writes a lot about this.
Yeah, Plan B. I think the stock to flow ratio was translated in like 7, 8 languages
Yeah,
already.
so it's widely known, but for people who don't know, it's incredibly interesting. But it's basically using the same model of valuation that precious metals use. So stock basically talks about the total amount of stock of that precious metal, or Bitcoin in this case, that currently exists, and the flow is the amount of new versions of that ore or digital ore in the case of Bitcoin that come into the market every year, and the ratio is the division of one by the other. So currently, silver, I believe, has a stock to flow ratio of about 22. So 1 over 22's worth of new silver enters the economy every year, is mined, etc. Gold has a stock to flow ratio of 62 roughly. At the moment, Bitcoin has a stock to flow ratio of 25, with the 12.5 Bitcoin being released every 10 minutes. It works out, if you divide the total amount of Bitcoin by the new amount appearing every year, roughly 25. Now, with the halving, that's going to double to 50, okay? Now, but what's really interesting is if you take the stock to flow ratio and map the price of Bitcoin to that stock to flow ratio over the last, and now we have 10 years of data, the correlation is striking.
Yeah,
it's
really
insane. So what this tells you is that although there are many other things that affect the price, when you think about it in the long term, the stock to flow ratio seems to have an incredible correlation. Now, really, this theory has only come out in the last 6 to 8 months or so. So we really need to see how it operates for another few years to be sure. But it is really striking. And if that's the case, next year with the stock to flow ratio doubling, we'd expect the market cap to move towards close to that of gold. Now, silver's market cap is currently about 300 billion. Gold's is 8 trillion.
8 trillion, yeah.
So that's why many people believe with the next halving, the correct price of Bitcoin will tend towards the well over 1 trillion mark, which could lead to a price of Bitcoin of well over 60,000. If you divide by the number of Bitcoins, well over 60,000 US dollars per Bitcoin. Now, there'll be a lot of volatility around that, but there's a lot of excitement for that.
That is definitely fascinating, and I love the way
And
you
please
broke
don't
it down
take
so
that as
simply.
investment advice, by the way.
It's not investment
I've got to
advice.
say
But talking about investments, if we want to follow you and hear more about what you have to say about Bitcoin, learn more about Coinfloor, where is the best channel to actually catch you?
It's Twitter. I tweet rarely, but it tends to be around these things like Bitcoin as a form of digital real estate and so on. So it's Twitter for Coinfloor, which is at Coinfloor, and also my own personal Twitter, which is Obi, O-B-I. I was an early Twitter user, so I have a really cool Twitter handle.
Awesome. Thank you so much for the wealth of information. Definitely look forward to having you again, my friend.
No problem.
And for those watching out there, you had all the information you needed related to Bitcoin, the economics, the halving, the stock to flow ratio, the finite supply, and more for this timeless interview. Don't forget to like, comment. If you have any questions for Obi here at Coinfloor, please put them below. And don't forget to blast that bell notification so you get access to these timeless interviews. Look forward to seeing you next week, premiering every Wednesday at a PC near you.